Okay, let's unpack this. Welcome to the deep dive. Today, we are plunging headfirst into the incredibly ambitious and, let's be honest, pretty complex world of Meta Platforms, Inc. This really isn't just about Facebook anymore, is it? It's about decoding this massive tech giant that's right smack in the middle of trying to, fundamentally reshape itself and maybe reshape the internet as we know it. We've pulled together quite a stack of sources for you. I mean, everything from deep analysis on Meta's history and strategy to the hard numbers on their financials, the cutting edge tech they're building, their operational challenges, how they're governed, the tangled web of regulations they're facing, and, all the key recent developments. Our mission for you in this deep dive is pretty straightforward. We're going to help you slice through the noise, the daily headlines, the endless scrolling, and truly grasp what's driving this company's monumental transformation beyond those familiar social apps you might use every single day. And strap in, because there are some genuinely striking insights buried in this material.
We're talking about the real strategic muscle behind that name change you heard about, the frankly astonishing scale of the future they're trying to build, and, the high wire act they're performing to fund it all. Let's get into it. So the most visible symbol of this radical shift, the one that really grabbed everyone's attention, happened back on October 28, 2021. Facebook, Inc., officially rebranded, became Meta Platforms, Inc. The big question that immediately comes to mind is, why? I mean, why would you change the name of one of the single most recognized brands on the entire planet?
Yeah, that's the crucial starting point, isn't it? And the answer really begins with the word meta itself. Its origins are Greek, meaning beyond, after, or behind. But today it carries these broader connotations, change, transcendence, even self-reference, like thinking about the structure of something at a higher level. And this semantic richness is really central to what Meta is trying to signal. The name change wasn't just cosmetic, not at all. It was a powerful, deliberate statement of long-term strategic intent. It explicitly pointed the company's direction away from being defined solely by 2D social networks and towards something fundamentally new. It was directly tied to those colossal investments in the Reality Labs division you mentioned, and Mark Zuckerberg's refined mission to build the future of human connection. They want the world to see them as architects of a new digital reality, basically, not just operators within the current one.
Okay, right. So it's not just slapping a new sticker on the box. It's about telling the world they're building a whole new machine. And our sources frame this rebrand really effectively as a dual strategy. It's both defensive and offensive at the same time.
Precisely. Yeah, look at the defensive angle first. The Facebook brand, it had accumulated significant reputational baggage, right? Think about the persistent controversies around data privacy, the challenges of misinformation, concerns about mental health impacts. The name Meta offered a potential opportunity to shed some of that weight, to attempt a narrative reset.
Makes sense. A fresh start, kind of.
Kind of. But the offensive play is perhaps even more significant. It was about forcefully staking a claim, saying, we intend to be the leader in what they view as the next major computing platform after mobile, which is, of course, the nascent metaverse. And this wasn't just marketing talk. It's backed by truly eye-watering levels of R&D and capital investments, specifically targeting AI and the necessary metaverse infrastructure. It's basically a declaration that they don't just want to participate in the next wave, they intend to define it.
Right. Okay, looking back at Meta's journey, it's been, a pretty dizzying ascent. Founded as the Facebook in 2004, that massive IPO in 2012, key acquisitions like Instagram in 2012, WhatsApp in 2014. Even their internal motto shifted, didn't it? From the famous move fast and break things to move fast with stable infrastructure. More grown-up, maybe.
More stable, certainly. Less breaking things, hopefully.
Yeah. Of course, there were bumps, like that challenging period in 2022 with declining profits and layoffs. But then came a resurgence, heavily fueled by AI, it seems. And we've seen recent products like Threads launching in 2023 and the Llama 2 AI model that same year. Lots happening. And their core mission and vision, they've clearly evolved right alongside that name change. The original mission was give people the power to build community and bring the world closer together. Pretty straightforward. The new mission statement now reads, build the future of human connection and the technology that makes it possible. Broader.
Yeah, and the vision. Bring the metaverse to life and help people connect, find communities, and grow businesses.
So connect those dots for us. How does that evolution link together?
Well, if you connect this to the bigger picture, you see that the core concept of connection, that's still the through line. That remains. But the future, the metaverse, is explicitly placed as the central mechanism for how that connection will manifest, They're clearly aiming to leverage their existing colossal strengths, the immense user base, their expertise in building communities to pioneer this new frontier. The critical challenge they face, though, is convincing that massive existing user base, literally billions strong, to actually move into or deeply engage with this new metaverse vision. That's the hurdle.
Yeah, bringing people along. And speaking of looking to the future, Mark Zuckerberg has been incredibly direct about their two overriding strategic imperatives, AI and the metaverse. He even stated AI would be their main investment focus in 2024, even as they continue pouring gigantic sums into Reality Labs for the metaverse.
And what's fascinating here is how inextricably linked AI and the metaverse are in their strategy. AI isn't some side project. It's framed as the absolute catalyst required to make genuinely immersive and compelling metaverse experiences possible.
How so?
Well, AI is essential for deep personalization, for generating believable content, creating hyper-realistic avatars like their codec avatars research is showing promise on. It powers AI assistants like Meta AI within environments like Horizon OS, and it's what makes devices like AI glasses actually functional and useful. And conversely, the metaverse is seen as the ultimate rich environment in which to deploy and, crucially, ultimately monetize these advanced AI capabilities at scale. Zuckerberg himself emphasized this in the Q1 2025 earnings call. He highlighted how AI's impact is already visible across the board, improving ads, boosting engagement across apps, powering business messaging, enabling Meta AI as a product, and making those AI devices like glasses work. So their success in realizing the metaverse vision is fundamentally dependent on their leadership and execution in AI. They go hand in hand.
Structurally, then, Meta's business is really built on these two main pillars. The family of apps, FOA, and Reality Labs, RL.
Exactly. FOA is the engine everybody knows. Facebook, Instagram, WhatsApp, Messenger, and now Threads. This segment connects billions every single day. We're talking 3.35 billion daily active people, 3.98 billion monthly active people across the whole family as of December 2024. Just huge numbers.
Unboggling, really.
It is. And its primary monetization engine is targeted advertising, where, again, AI is absolutely critical for optimization and effectiveness. There's also that growing other revenue stream things like WhatsApp Business and Meta Verified subscriptions. That hit $510 million in Q1 2025, up a healthy 34% year over year. But the key thing is FOA is the indisputable cash cow. It generates the immense profits needed to fund the far more speculative RL segment.
Right, the cash cow. But that business, FOA, it isn't just sitting pretty without pressure, is it?
Not at all.
They face intense competition for user attention, right?
Yeah.
Especially from platforms like TikTok.
Definitely.
They've had to navigate the significant impact of privacy changes, like Apple's ad tracking transparency. That was a big deal.
Huge impact, yeah.
Yeah. And there's constant pressure to innovate, the push with Reels, launching Threads, even experimenting with AI-generated accounts to keep feeds fresh. The diversification into subscriptions and business messaging really feels like calculated moves, doesn't it? To build revenue streams beyond just pure advertising growth.
Absolutely. Hedging their bets.
Honestly, the ongoing health and profitability of FOA seems absolutely foundational. Like, the whole strategy depends on it.
That's exactly it. Can the traditional business keep churning out the billions needed? Which brings us neatly to Reality Labs. This is the segment that houses their entire metaverse ambition. It includes the hardware, like the Meta Quest headsets. You've got Quest 2, 3, the new 3S, the Pro, and those increasingly popular Ray-Ban Meta AI glasses. It also includes the software platforms like Horizon Worlds and Horizon OS. This is where they are pouring the vast majority of their investment.
Okay, and this is where the numbers get pretty wild.
Yeah. This is also the segment that reports staggering operating losses. The numbers here are just incredible. An eye-watering $17.7 billion operating loss for the full year 2024.
$17.7 billion.
Killian. And a loss of $4.21 billion in just Q1 2025, set against only $412 million in revenue for RL in that same quarter. Tiny revenue, huge loss.
Yeah, just $17.7 billion lost in a single year just on Reality Labs.
Yeah.
What do those kind of numbers really tell us about the nature of Meta's strategy here?
They tell you this is a long-term, incredibly high-stakes bet, period. Meta isn't just building a new product line. They are betting that the metaverse will become the next dominant computing platform, replacing or augmenting mobile in a significant way, and that they will be at its absolute center. It's not just investing, it's like a capital-intensive war of attrition, deliberately using the immense profits from FOA to simply outspend any potential competitors in the extended reality or XR space.
So, throwing money at the problem to win.
In a strategic way, yes. The Oculus acquisition back in 2014 for $2.3 billion. That was an early indicator of this long-term thinking. But the scale now is just immense. They are operating with like a 5 to 10 year horizon, even for things like AI glasses becoming truly mainstream. Success here could mean they own the foundational layer of the next digital era. Huge upside. Failure, however, well, it could go down as one of the most significant capital allocation blunders in corporate history. Market patience with these persistent multi-billion-dollar losses will hinge entirely on seeing tangible progress. Real user adoption, a developing ecosystem. They need to show something for it.
Okay, let's zoom out then and look at the consolidated financial picture. Because despite those jaw-dropping RL losses, the company-wide numbers recently have looked quite strong, actually.
Well, we have, yeah.
Q1 2025 saw consolidated revenue jump 16% year over year to over $42 billion. Net income soared 35% to $16.6 billion, and earnings per share were up 37%. Costs and expenses seemed controlled, up only 9%, even though headcount increased 11% after the prior year's cuts.
Right, they got efficient.
And for the full year 2024, revenue was up a healthy 22%. Net income up a remarkable 59%.
So what this financial narrative tells us is really a tale of two companies operating simultaneously under one roof. You have the core ad business within FOA, which has shown a strong rebound and is incredibly profitable. It recorded a massive $21.77 billion in operating income in Q1 2025 alone.
$21 billion in profit from FOA in one quarter.
Exactly. And this profitability is absolutely non-negotiable because it serves two critical functions. First, it funds the astonishing planned capital expenditures for building out AI and Metaverse infrastructure, projected between $64 billion and $72 billion for FY 2025. Massive spending.
And 64 to 72 billion, just planned spending.
Yeah. And second, it has to absorb those multi-billion-dollar operating losses from Reality Labs we just talked about. The fact that they are successfully growing both their daily and monthly active users and increasing the price they get per ad shows they are executing well in the core business. That FOA engine is humming. Meta is essentially walking a financial tightrope, right? Trying to maximize efficiency in the present to fund these aggressive, high-risk, long-term investments.
Right. And looking back at the historical financial trends, say from 2020 through 2024, you clearly see that growth trajectory.
Yeah.
Then the dip in 2022, which was hit by broader economic headwinds and that Apple ATT impact.
Yes, that hurt.
And then the strong recovery we just discussed. And consistently throughout that period, Reality Labs revenue is just a tiny fraction of the total, completely overshadowed by its massive persistent losses.
Exactly. Geographically, the US and Canada still bring in the most revenue.
So this financial strength in the core business, it allows them to do something interesting for shareholders too, doesn't it?
It does. Meta initiated a quarterly dividend in 2024, paying more $5.25 per share in Q1 2025.
Yeah.
And they also continue very significant share repurchases, $13.4 billion worth in Q1 2025 alone.
$13 billion in buybacks, plus a dividend.
Yeah. This dual approach returning capital to shareholders through dividends and buybacks while pouring tens of billions into risky long-term bets. It indicates confidence in FOA's ability to keep generating cash flow, but it definitely underscores the financial balancing act they're performing. It's quite something.
Okay, let's dig into those technological frontiers a bit more deeply then. AI and the Metaverse, really the twin engines of their stated future.
Absolutely. And Meta has deep strengths in AI research and development, no question. They've built and, importantly, open-source powerful large language models like Llama 2. And more recently, they're training even larger Llama 4 models names like Scout, Maverick, Behemoth are being mentioned. Big models.
Right, the Llama models. Heard a lot about those.
Yeah, and their Meta AI assistant is already integrated and widely used. It reached nearly 1 billion monthly active users in Q1 2025.
A billion users for the AI assistant already. Wow.
Yeah, integrated across their apps. And critically, AI is woven into improving the effectiveness of their ads, personalizing content recommendations in your feed, powering business messaging, and enabling key features for those AI glasses we talked about. They also invest heavily in foundational research through their FAIR division, that's Facebook AI Research, and they're even building custom hardware like MTIA V1, that's their own custom chip designed specifically for AI tasks to work alongside NVIDIA GPUs.
So they're building their own AI chips.
They are. The key takeaway here is that AI isn't some siloed project for them. It's the underlying intelligence they're integrating across everything, from making the existing apps better to enabling the capabilities needed for the metaverse. And building custom hardware shows a strategic intent to gain proprietary advantages in AI silicon over the long term. Their future competitiveness, really across the board, is heavily reliant on their ability to stay at the bleeding edge of AI development and deployment.
Okay. And then there's that, monumental metaverse venture, primarily housed within Reality Labs.
Yes. Despite those significant losses we keep mentioning, this is the core of their ambitious transformation, no doubt about it. The Quest headsets and the Horizon Worlds social platform are the most visible products today. The ultimate vision is, a persistent shared virtual world where people can connect, work, play, learn, all that stuff. It's their riskiest and most transformative bet. They're aiming to define nothing less than the next generation of social technology and personal computing.
Huge ambition.
Excessive. But as we've touched on, realizing that vision faces huge hurdles. Widespread user adoption is still a major question mark. I mean, getting billions of people to embrace immersive VR or AR experiences isn't easy. It's a big behavioral shift.
Right. It's not like just downloading another app.
Exactly. They need to build a vibrant content and developer ecosystem, especially beyond just gaming. That's crucial. And finding a clear path to profitability that goes beyond just subsidizing hardware sales, well, that's also critical. The R&D and ecosystem building costs currently just far outstrip the revenue generated. It's way underwater. It's a long-term effort. Remember, the term metaverse was coined in a sci-fi novel way back in 1992. It shows how long people have been thinking about this stuff.
Wow, 1992?
Yeah. So they need to build a truly compelling value proposition for users and for developers. Devices like the AI glasses, which blend the digital and physical world more subtly, they might actually be a more tangible step towards mainstream adoption compared to fully immersive VR headsets, at least today.
Interesting point. And funding all of this requires truly staggering R&D spending, as you mentioned. Meta spent over $43 billion on R&D in FY 2024, $12 billion in Q1 2025 alone. They were reportedly the third largest global R&D spender back in 2022, pouring money into AI, machine learning, advanced hardware, neural interfaces, you name it.
Yeah, and that scale of R&D, it isn't just about iterating on existing products. It's about attempting to build a deep, proprietary technological advantage in AI and extended reality, basically from the ground up. Investing in custom silicon, training massive AI models, developing complex hardware. This is a long-term strategy to effectively own the key foundational technologies of the next computing paradigm. And it's all funded by the immense profits from the core social media business. The risk, of course, is that if these ambitious projects don't pan out commercially, those tens of billions become significant write-downs. A huge gamble.
Okay, let's switch gears a bit and talk about the intense market dynamics and competition Meta faces across its various businesses, starting with ads.
Right. The digital advertising market is enormous, and it keeps growing significantly, especially social media ad spending. Meta holds a massive share, obviously, but the landscape is definitely evolving. It used to be largely seen as a Google-Facebook duopoly, but now you see Amazon emerging as a major player, particularly in retail media. That's a big shift.
Yeah, Amazon ads are everywhere now.
They are. Meta counters this with increasingly sophisticated AI-powered ad tech like their Advantage Plus suite. And by finding new places for ads in Reels, potentially future placements in messaging, maybe even the metaverse someday, their advantage remains their vast user data and engagement levels, but they have to constantly innovate to maintain ad effectiveness, especially with things like Apple's ATT privacy changes impacting targeting.
Okay, and what about social media itself?
Well, on the social media front, Meta still dominates the traditional space. Facebook has billions of users. WhatsApp is the leading messaging app globally. The challenge isn't necessarily overall user numbers right now, but it's growth stagnation in already saturated markets like North America and Europe. And the fierce competition for user attention, particularly from TikTok, but also from Snap and X.
TikTok's a big one.
Huge. Meta's response involves investing heavily in short-form video with Reels, using AI for better content recommendations. Exploring concepts like AI-generated accounts to keep feeds dynamic, and launching threads to directly compete with X. Maintaining engagement, especially with younger demographics, is absolutely critical because, again, this is the core business that funds everything else. They can't let it slide.
Right. And then there's AR/VR.
Yeah, the AR/VR market. It's still quite young, relatively small compared to mobile or PCs, and it's seen some volatility. Forecasts expect a rebound, but it's not a straight line up. Meta is the clear leader in VR headsets right now, holding around, 74.6% market share in 2024? Dominant share.
Almost 3/4 of the market.
Yeah. But competition is definitely picking up, notably with Apple's high-end Vision Pro headset, although that's at a much, much higher price point.
A very different price point.
Very different. Meta's strategy has been to subsidize the hardware sell the Quest headsets relatively cheaply to drive adoption. And they're trying to expand use cases beyond just gaming into areas like education, fitness, enterprise collaboration. They desperately need a vibrant developer ecosystem and compelling non-gaming applications to really make VR and mixed reality mainstream. That's the key challenge there.
Okay, and finally, the AI ecosystem itself.
Right, the AI ecosystem. It's massive, it's expanding incredibly rapidly, and Meta is a major player, a major investor. Their distinctive strategy, as we mentioned, is open sourcing powerful models like Llama. This contrasts pretty sharply with the more closed proprietary approaches of companies like OpenAI, which is tightly linked with Microsoft, or Google.
So why open source? What's the thinking?
Well, the goal seems to be multifaceted. They want to accelerate innovation across the entire industry, hoping that benefits them too. They want to build a large developer community around their technology, making it a standard. Potentially, they want to commoditize certain aspects of AI development, making it harder for closed models to maintain a unique advantage. And it's also a way to counter the dominance of those closed models. Some research even suggests open source AI acts as a significant catalyst for economic growth overall.
Interesting. What's the risk?
The risk, of course, is giving away valuable intellectual property. Competitors can use and build upon their models, so their success here really depends on whether this open approach ultimately translates into a stronger competitive position for Meta's own products and services that utilize these models. Does openness help them win in the end? TBD.
So Meta is in this really fascinating, maybe unique position then. They are a dominant incumbent in the core social media and advertising markets.
Yeah.
Yet they're simultaneously acting as a major disruptor in emerging fields like AR, VR, and AI.
Exactly. And they're funding that incredibly expensive disruption using the immense profits generated by their existing dominant business. It's quite a setup.
The risks seem clear, though. They could dilute their focus, maybe spread themselves too thin.
That's definitely a risk, and potentially face increased antitrust scrutiny for leveraging their existing market power in these new areas. Regulators are watching closely.
Okay. Now, building complex hardware like VR headsets and AI glasses, that must mean navigating some serious operational challenges, particularly around the supply chain, right?
Oh, absolutely. It's a huge part of the equation. They rely heavily on manufacturing partners like Gore-Tex for Quest headset production. Our sources noted that Meta has reportedly planned to shift about half of its Quest production from China to Vietnam, where Gore-Tex also has facilities.
Shifting production out of China.
Well, it signals a clear supply chain diversification strategy. It's likely a move to hedge against geopolitical risks and potential tariffs impacting production centered solely in China. Key components, like the Snapdragon XR2 chips powering the Quest, come from Qualcomm. Displays from various suppliers. It's a complex global network. This move towards geographical diversification, while it probably adds complexity in the short term, seems like a necessary precaution for their hardware ambitions in the current global climate. Spreading the risk.
Makes sense. And on the software side, building the metaverse needs apps.
Exactly. Building that metaverse vision requires a robust application development framework. So Meta provides SDKs, software development kits for developers, and uses the Oculus Store, now called the MetaQuest Store, for distribution. Cultivating a thriving developer ecosystem is absolutely crucial, particularly for platforms like Horizon Worlds and the broader Quest OS. They need a continuous flow of compelling content and experiences beyond just what Meta creates itself. They can't build it all.
Right. They need others to build for the platform.
Precisely.
And then there is that persistent, often controversial, and incredibly complex operational challenge. Content moderation at scale.
Yeah. This is a major ongoing hurdle for Meta. It impacts both their operations and their reputation significantly. They invest heavily in a combination of AI detection and human review to try and enforce their policies across billions of posts daily. Billions.
The scale is just hard to comprehend.
It really is. But they face constant scrutiny over how they handle hate speech, misinformation, child safety online. The list goes on. Recent controversies, like changes to their hateful conduct policy, which drew criticism from groups like GLAD, highlight just how difficult it is to set and enforce policies that satisfy diverse global expectations.
And they're trying new things too, right? Like community notes.
Yes, they are testing a system similar to X's community notes on Facebook, Instagram, and Threads, currently in the US. This would rely more on users to add context rather than primarily using third-party fact-checkers. The fundamental difficulty is scaling effective, consistent, and acceptable moderation across an incredibly diverse user base and content types. It's just incredibly hard.
AI isn't perfect.
Not by a long shot. It can introduce biases. And human moderation is incredibly challenging work, emotionally taxing and expensive. Policy decisions are inherently complex and often draw criticism from different directions no matter what they do. The shift towards things like community notes could be an attempt to distribute the burden and responsibility, maybe, but its effectiveness at scale remains to be seen.
And regulatory pressure isn't going away.
No way! Regulatory pressure globally, like from Europe's Digital Markets Act, is likely to continue increasing. It will force them to keep adapting their content moderation approaches. This remains a fundamental challenge for building trust and ensuring the long-term viability of their platforms. It's never solved.
Okay, moving to governance and ESG. Meta's board structure is notably chaired by Mark Zuckerberg, still founder-led, but they have recently added some interesting diverse members, like Patrick Collison, the CEO of Stripe, and Dina Powell-McCormick, former White House official and Goldman Sachs exec.
Yeah, that addition of board members with expertise spanning global operations, finance, technology, it seems pretty relevant for a company navigating this complex transformation and intense regulatory environment. The composition of the board, and particularly the independence and expertise of committees overseeing areas like risk and privacy, are important indicators of corporate accountability and oversight, especially in such a founder-led company.
Right. And on the ESG front, environmental, social, and governance, what did the sources say?
Well, our sources paint a somewhat mixed picture, actually. Environmentally, they show strong progress. They've had net zero operational emissions since 2020. They match 100% of their energy use with renewable sources.
Sure.
They aim to be water positive by 2030, and they invest in carbon removal projects. That all looks pretty good.
Driven by genuine concern or pressure?
Probably a mix, right? Sustainability goals, operational efficiency benefits, and definitely responding to investor demand for better environmental performance. However, socially, there have been some notable controversies recently. Sources highlighted a significant rollback of core diversity, equity, and inclusion, or DEI, programs in early 2025. The company reportedly cited legal and political changes as the reason, shifting focus away from hiring quotas towards things like employee resource groups and mentoring.
That sounds controversial.
It drew criticism, yeah. And it contrasts with prior reports on their diversity efforts, coupled with the ongoing content policy issues we just discussed, like the GLA'd criticism of the hateful conduct policy changes. Meta faces significant social challenges and reputational risk. So this divergence between strong environmental performance and these controversial social decisions creates a complex ESG narrative for investors and the public. It's not a simple story.
Definitely complex. And speaking of complex, the regulatory environment Meta operates in is arguably one of the most challenging faced by any company globally.
Oh, absolutely. It's a minefield. They are fighting an active FTC antitrust lawsuit in the U.S. over the Instagram and WhatsApp acquisitions. That's huge. They are navigating complex and sometimes conflicting data privacy regulations and debates globally. For example, there was a ruling in Germany on using user data for AI training versus criticism from authorities in Hamburg regarding their practices. It's different everywhere. And major legislation like Europe's Digital Markets Act, DMA, is forcing significant changes to their operations in that crucial European market.
So they're fighting battles on multiple fronts.
Constantly. This multi-front legal and regulatory battle consumes immense resources, creates significant uncertainty, and carries the risk of substantial fines or even forced structural changes to their business or future acquisitions. Their sheer scale and market position just make them a primary target for regulators worldwide. The regulatory cloud is a persistent factor impacting everything they do.
And perhaps partly because of that intense scrutiny on acquisitions, our sources didn't highlight major M&A activity recently.
That seems likely, yeah. With potential large acquisitions facing such high regulatory hurdles, it's tough to get big deals done.
But they are using strategic partnerships more.
That's right. Meta seems to be increasingly using strategic partnerships as a less scrutinized path to access specialized expertise or enter new markets. Examples include those discussions around developing capabilities for stablecoins for payments, or partnering with defense contractor Anduril on a Pentagon contract involving XR wearable devices.
Interesting bedfellows there.
Indeed, these partnerships allow them to explore new capabilities and extend the reach of their core technologies without the significant regulatory burden and delays associated with acquiring a company outright. It's a more agile way to pursue certain opportunities given the current climate.
Okay, let's quickly touch on some recent key developments, say from late 2024 into May 2025, just to show how fast things are moving.
Yeah, the pace is relentless.
We saw continued updates to the Quest OS, improving things like the Gallery app, hand tracking, remote desktop capabilities, and integrating Facebook and Instagram DMs directly into the headset experience. Little quality of life things.
Important for usability. And on the AI front, they integrated Meta AI with vision capabilities into Horizon OS that allows object detection within VR. And they released more details about those larger Llama 4 models like Scout and Maverick, still pushing AI hard.
They also continued to experiment with content, right? Testing that community notes feature in their main apps in the US.
Yep, and launching experimental AI-generated accounts, trying things out.
Hardware-wise, they expanded the availability of the Ray-Ban Meta AI glasses to India, growing the footprint.
And our sources also mentioned research highlighting the economic growth catalyzed by open source AI, which directly supports their strategic decision to open source Llama, kind of a validation point for them. These recent developments really just underscore the rapid pace of iteration, particularly on the Quest platform and within their AI capabilities. Software and AI updates are absolutely critical for making the hardware more valuable over time, expanding the potential user base, and ultimately building the ecosystem necessary for that metaverse vision to gain traction towards mass adoption. Keep shipping updates.
Okay, so bringing it all together then, Meta Platforms is clearly at a critical strategic crossroads, a real inflection point. They are leveraging the immense profitability and scale of their established, dominant social media core business to finance a truly massive and undeniably risky bet on AI and the metaverse as the next frontier of human connection and the successor computing platform.
Yep, that's the essence of it, and the stakes could not be higher. Seriously. On one hand, they have the potential to fundamentally redefine digital interaction on a global scale, position themselves at the forefront of the next technological era, create enormous value. But on the other hand, there's the significant risk of massive capital destruction from those persistent Reality Labs losses.
Right.
If the metaverse doesn't materialize as they envision it, it could potentially even erode their current market position if this intense focus on the future distracts too much from optimizing the core business today.
All right, and maintaining investor confidence through this high-risk long-term play is absolutely crucial, isn't it?
Totally. That means Meta will have to demonstrate tangible progress. They need to show results. Progress in AI integration across their products, show meaningful user adoption and engagement in their metaverse offerings, and outline a clear path to eventual monetization for these new ventures in the coming years. Investors won't wait forever.
So this brings us to the key question for you, the listener, to consider as you process all this information. Given the scale of the technological, financial, competitive, and regulatory challenges they face, will Meta's grand vision of the metaverse truly become a universally adopted reality, fundamentally changing how billions interact digitally?
Or will it remain more of a niche platform, heavily subsidized by its dominant social media apps, ultimately changing what the name Meta truly means for the company's long-term identity and future success? Is it the future or an expensive side project? What stands out to you from this deep dive?